Question 1. Which of the following is the primary responsibility of an insurance adjuster when investigating a property insurance claim? A. Determine the premium amount for the policyholder. B. Investigate the cause and extent of the damage to the property. C. Provide legal advice to the insurer. D. Approve the settlement amount for the claim. Answer. B. Investigate the cause and extent of the damage to the property. Explanation. The primary responsibility of an insurance adjuster when investigating a property insurance claim is to assess the cause and extent of the damage to the property. This involves gathering information, examining the scene, interviewing the claimant, and evaluating the damage to determine the appropriate coverage and settlement. The adjuster does not determine premiums or provide legal advice. While the adjuster does play a key role in settlement negotiations, they are not the final authority on approval, as that decision lies with the insurer or claims department. Question 2, scenario-based. Mr. Harris is a claims adjuster handling a commercial property claim after fire. The insured claims significant damage to both the building and the business's inventory. And after reviewing the property damage, the adjuster realizes that the insured has submitted an inflated inventory list. What is Mr. Harris's next course of action according to Wisconsin law? A. Approve the claim but reduce the settlement for the inventory discrepancy. B. Immediately deny the entire claim due to misrepresentation. C. Report the discrepancy to the insurer and initiate fraud investigation. D. Discuss the discrepancy with the insured and attempt to negotiate lower settlement. Answer. C. Report the discrepancy to the insurer and initiate a fraud investigation. Explanation. Under Wisconsin law, the adjuster has a duty to report any suspected fraud, misrepresentation, or inflated claims. In this scenario, the adjuster has identified a potential issue with the inventory list provided by the insured. According to the Wisconsin Insurance Code and the role of the adjuster, the correct procedure is to report the discrepancy to the insurer and initiate a fraud investigation. The adjuster should not attempt to negotiate the settlement or approve the claim without further investigation. The denial of the claim may be appropriate only after the fraud investigation is completed, but immediate denial without investigation is premature. Question 3. Which of the following best describes the concept of insurable interest in insurance policies? A. The policyholder's right to file a claim based on the value of the property insured. B. The financial stake a person has in the preservation of the property or life insured. C. The agreement between the policyholder and the insurance company regarding coverage limits. D. The insurer's obligation to pay claims regardless of the policyholder's involvement in the incident. Answer. B. The financial stake a person has in the preservation of the property or life insured. Explanation. Insurable interest refers to the financial stake or relationship a policyholder has in the property or life insured. It is a fundamental concept in insurance, ensuring that the person purchasing the policy would suffer a financial loss if the insured property or person were damaged or lost. Without insurable interest, the policy would be considered a wager or gamble, which is prohibited by insurance law. This principle ensures that insurance is used as a risk management tool rather than as a speculative venture. The insurer is not obligated to pay claims if the policyholder has no insurable interest in the insured item or person. Question 4. Which of the following is true regarding the underwriting process in insurance? A. Underwriting is only concerned with determining the premium rates for policyholders. B. Underwriting evaluates the risk factors associated with a policyholder to determine if coverage should be provided. C. Underwriters only approve claims and are not involved in policy issuance. D. Underwriting is an optional step that is not necessary for all types of insurance policies. Answer. B. Underwriting evaluates the risk factors associated with a policyholder to determine if coverage should be provided. Explanation. The underwriting process involves assessing the risks associated with an applicant or policyholder and determining whether to issue a policy and at what terms. Underwriters evaluate various risk factors, including the policyholder's history, the type of coverage requested, and the risk exposure. The goal is to ensure that the insurer does not assume too much risk. Underwriters do not approve claims. Rather, they are involved in the decision to issue the policy. Premium rates are influenced by underwriting, but underwriting itself is not limited to determining premiums. Underwriting is a critical step in the insurance process and is necessary for most types of policies. Question 5. Which of the following is the most common method for adjusting claims involving damage to a vehicle in an auto insurance policy? A. Actual cash value, SEV. B. Indemnity coverage. C. Replacement cost coverage. D. Depreciation limit. Answer A. Actual cash value SEV. Explanation. In auto insurance, the most common method for adjusting claims involving damage to a vehicle is the actual cash value SEV method. A CV takes into account the depreciation of the vehicle's value, meaning the amount paid for the claim is based on the current market value of the vehicle, not the cost to replace it. This contrasts with replacement cost coverage, which would cover the full cost to replace the vehicle without factoring in depreciation. While indemnity coverage refers to restoring the policyholder to the same financial position as before the loss, a CV is typically used for vehicle damage claims. Question 6. Scenario-based. Mr. Lewis, a public adjuster, is handling a claim for a small business owner whose property was damaged in a tornado. The insured has submitted an estimate for repairs that exceeds the total policy limit, claiming that the damage is worse than initially assessed. What should Mr. Lewis do first? A. Approve the claim for the amount requested and submit it for final settlement. B. Hire a contractor to conduct a second evaluation of the damage and compare estimates. C. Recommend the insured accept the settlement as it is, within the coverage limits. D. Immediately inform the insured that the policy limit cannot be exceeded and close the claim. Answer B. Hire a contractor to conduct a second evaluation of the damage and compare estimates. Explanation. When dealing with significant damage, especially in the case of a natural disaster like a tornado, the adjuster or public adjuster must conduct a thorough investigation to ensure that the claim is accurate and supported by evidence. In this case, Mr. Lewis should hire a contractor to conduct a second evaluation of the damage and compare the estimates with the insured's claim. This helps to avoid any misrepresentation or inflated claims and ensures that the insured receives a fair settlement within the terms of the policy. The adjuster should not approve the claim until all evaluations are complete and verified. Question 7. Which of the following is not typically covered under a standard homeowner's insurance policy? A. Damage to personal property due to fire. B. Theft of personal property from the insured home. C. Damage caused by a flood. D. Medical expenses for guests injured on the insured property. Answer C. Damage caused by a flood. Explanation. Flood damage is generally excluded from standard homeowners insurance policies, while a standard policy covers damage to personal property due to fire, theft, or medical expenses for guests injured on the property. Flood damage typically requires a separate flood insurance policy. Flood insurance can be obtained through the National Flood Insurance Program (NFIP) or from private insurers. Homeowners should be aware of this limitation and consider additional coverage if they live in an area prone to flooding. Question 8. What is the primary function of an insurance adjuster when assessing a workers' compensation claim? A. To determine the medical expenses covered under the claim. B. To determine fault in the incident that caused the injury. C. To evaluate the injured worker's eligibility for compensation and benefits. D. To assess the impact of the injury on the worker's personal life. Answer C. To evaluate the injured worker's eligibility for compensation and benefits. The explanation. In a workers' compensation claim, the adjuster's primary function is to evaluate the eligibility of the injured worker for compensation and benefits. This includes assessing the nature and extent of the injury, determining if the injury occurred during the course of employment, and ensuring that the appropriate benefits, medical expenses, lost wages, etc. are provided. The adjuster does not determine fault, as workers' compensation is a no-fault system that provides benefits regardless of who is responsible for the injury. The focus is on compensating the injured worker for medical costs and lost wages related to the injury. Question 9. Which of the following is an example of a waiver of subrogation clause in an insurance policy? A. Clause that prevents an insurer from denying claim based on misrepresentation by the insured. B. Clause that allows the insured to retain the full value of claim despite third-party involvement. C. Clause that prevents the insurer from pursuing legal action against responsible third party after paying claim. D. Clause that eliminates the insured's responsibility for paying premiums in the event of claim. Answer C. A clause that prevents the insurer from pursuing legal action against a responsible third party after paying a claim. Explanation. A waiver of subrogation clause prevents the insurer from pursuing legal action against a third party who may have caused the loss after the insurer has paid the claim. This clause is typically included in contracts between the insurer and a third party, like when a landlord waives the subrogation rights of their insurance provider in the event of damage caused by a tenant's actions Subrogation is a legal process by which an insurer seeks reimbursement from a third party who is liable for the damage. The waiver of subrogation prevents this process from taking place, often as part of a negotiated agreement. Question 10. What is the key difference between replacement cost and actual cash value received in insurance claims? A. Replacement cost considers depreciation, while SCV does not. B. Replacement cost reimburses the full cost to replace the damaged property, while SCV accounts for depreciation. C. Replacement cost is a fixed amount determined by the insurer, while SCV is a flexible calculation. D. SCV covers damages only if the property is fully destroyed, while replacement cost applies to partial damage. Answer: B. Replacement cost reimburses the full cost to replace the damaged property, while SCV accounts for depreciation. Explanation: the key difference between replacement cost and actual cash value SCV is that replacement cost reimburses the policyholder for the full cost to replace the damaged property without factoring in depreciation, while SCV accounts for depreciation in the calculation. This means that under an SCV policy, the payout will be lower than the full replacement cost, as the value of the property is reduced by its depreciation. In contrast, replacement cost provides a higher payout as it covers the cost of replacing the property at current market value without considering how much the property has depreciated. Question 11. Which of the following is true regarding the deductible in an insurance policy? A. The deductible is the amount the insurer will pay for a claim. B. The deductible is paid by the insurer before the claim is processed. C. The deductible is the amount the policyholder must pay before insurance coverage kicks in. D. The deductible is a fixed percentage of the insured value. Answer: C. The deductible is the amount the policyholder must pay before insurance coverage kicks in. Explanation: a deductible is the amount the policyholder is responsible for paying out of pocket before the insurance coverage starts to pay for a claim. For example, if a policy has a $500 deductible and the claim is for $2,000, the insured will pay the first $500 and the insurer will cover the remaining $1,500. Question 12. Which of the following is an example of liability coverage in an auto insurance policy? A. Coverage for damage to your car in an accident. B. Coverage for medical expenses if you are injured in an accident. C. Coverage for damage you cause to someone else's property or injuries. D. Coverage for the theft of your vehicle. Answer: C. Coverage for damage you cause to someone else's property or injuries. Explanation: liability coverage in auto insurance covers the damage you cause to others. This can include property damage, e.g., to another person's car, and bodily injury, e.g., medical expenses for the other driver or passengers. It is designed to protect the policyholder if they are found legally responsible for causing an accident. Question 13. Scenario-based. Sarah is shopping for homeowners insurance. She wants to ensure that her personal property, such as electronics and furniture, is covered in the event of a fire. What type of coverage should she ask for? A. Liability coverage. B. Medical payments coverage. C. Property coverage. D. Loss of use coverage. Answer: C. Property coverage. Explanation: property coverage in a homeowner's insurance policy covers personal belongings such as electronics, furniture, and clothing. In the event of a fire, Sarah's personal property would be covered under this type of coverage. Liability coverage pertains to damage caused to others, while medical payments coverage is for injuries sustained by others on the insured's property. Loss of use coverage would apply if Sarah were unable to live in her home due to the fire. Question 14. Which of the following types of insurance would cover damage to a company vehicle used for business purposes? A. Homeowners insurance. B. Commercial auto insurance. C. Health insurance. D. Renters insurance. Answer: B. Commercial auto insurance. Explanation: commercial auto insurance is designed to cover vehicles used for business purposes. It covers both the vehicle itself and liability for damages caused while driving the vehicle for work-related tasks. Homeowners and renters insurance cover personal property and liability, while health insurance covers medical expenses, not vehicle-related incidents. Question 15. What is the purpose of uninsured motorist coverage in an auto insurance policy? A. To cover the cost of repairs to the policyholder's car. B. To pay for injuries or damages caused by a driver who does not have insurance. C. To cover the policyholder's medical expenses. D. To provide financial compensation for theft of the insured vehicle. Answer: B. To pay for injuries or damages caused by a driver who does not have insurance. Explanation: uninsured motorist coverage provides protection when the insured is involved in an accident with a driver who does not have insurance or does not have enough coverage to pay for the damages. It helps cover medical expenses, property damage, and other related costs when the at-fault party is uninsured. Question 16. Which of the following is an example of an exclusion in an insurance policy? A. Coverage for accidents that occur while driving a company car. B. Coverage for theft of personal property. C. Coverage for damage caused by flooding in a homeowner's insurance policy. D. Coverage for fire damage to a home. Answer: C. Coverage for damage caused by flooding in a homeowner's insurance policy. Explanation: exclusions in an insurance policy outline situations or events that are not covered by the policy. Flood damage is often excluded in standard homeowners insurance policies, meaning that the policyholder would need to purchase separate flood insurance to be covered for this type of loss. Other examples of exclusions might include damage from earthquakes or acts of war. Question 17. Scenario-based. A small business owner has a business interruption insurance policy. A fire causes significant damage to her shop and she is unable to operate for several months. What would business interruption insurance cover in this case? A. Medical expenses for the business owner. B. Repair costs for the damaged property. C. Loss of income due to the temporary closure of the business. D. Personal injury claims from customers. Answer: C. Loss of income due to the temporary closure of the business. Explanation: business interruption insurance is designed to cover the loss of income that occurs when a business is forced to close due to a covered event, such as a fire. It helps the business owner recover lost revenue during the period when the business is not operational. This type of insurance does not cover repair costs, medical expenses, or personal injury claims. Question 18. Which of the following is true about term life insurance? A. It provides coverage for the insured's entire lifetime. B. It has a fixed premium for the insured's lifetime. C. It only covers the insured for a specified period of time. D. It builds cash value over time. Answer: C. It only covers the insured for a specified period of time. Explanation: term life insurance provides coverage for a specified period, such as 10, 20, or 30 years. It does not build cash value like whole life insurance and has a fixed premium for the duration of the term. If the insured passes away during the term, the beneficiary receives the death benefit. If the insured outlives the term, no benefit is paid. Question 19. Which of the following insurance policies would cover the cost of medical bills if the policyholder is injured in an accident while on vacation abroad? A. Homeowners insurance. B. Travel medical insurance. C. Renters insurance. D. Auto insurance. Answer: B. Travel medical insurance. Explanation: travel medical insurance is specifically designed to cover medical expenses that arise when a policyholder is injured or becomes ill while traveling abroad. This type of insurance can provide coverage for emergency medical treatment, hospital stays, and even medical evacuation if necessary. Homeowners, renters, and auto insurance generally do not cover medical expenses incurred outside of the United States. Question 20. What does a claims-made coverage refer to in liability insurance? A. Coverage is provided only if the event leading to the claim occurred during the policy period. B. Coverage is provided for any event, regardless of when it occurred, as long as the claim is filed during the policy period. C. Coverage is provided for incidents that happen after the policy expires. D. Coverage is provided only for claims filed within the first 30 days of the policy period. Answer: A. Coverage is provided only if the event leading to the claim occurred during the policy period. Explanation: claims-made coverage in liability insurance means that the insurance policy will only cover claims that are reported during the active policy period and are a result of events that occurred during that period. Even if the event occurred in the past, but the claim is filed after the policy ends, it will not be covered unless the policy specifically includes tail coverage or an extended reporting period. Question 21. Which of the following best describes actual cash value received in an insurance policy? A. The replacement cost of an item minus depreciation. B. The market value of the item at the time of the claim. C. The amount the insurer agrees to pay for a loss. D. The total cost to repair or replace damaged property. Answer: A. The replacement cost of an item minus depreciation. Explanation: Actual cash value (ACV) is a method used by insurers to calculate the amount they will pay for a loss, which is the replacement cost of an item minus depreciation. For example, if an item is worth $1,000 and has depreciated by 20%, the ACV payout would be $800. Question 22. Which of the following would be covered under a flood insurance policy? A. Damage from a burst pipe. B. Damage caused by a windstorm. C. Damage from a storm surge. D. Damage from a fire. Answer: C. Damage from a storm surge. Explanation: flood insurance specifically covers damage caused by flooding, which can include damage from a storm surge during a hurricane or heavy rainfall that causes rivers or streams to overflow. Damage from a burst pipe or windstorm would typically be covered under other types of insurance like homeowners or renters insurance. Question 23, scenario-based. Jake is looking to purchase a health insurance policy that will provide coverage for his routine doctor visits, prescription medications, and hospital stays. Which type of plan would be best for him? A. Short-term health insurance. B. Major medical insurance. C. Catastrophic health insurance. D. Critical illness insurance. Answer: B. Major medical insurance. Explanation: major medical insurance is designed to provide comprehensive coverage for a wide range of medical expenses, including routine doctor visits, prescriptions, and hospitalization. Short-term health insurance typically offers limited coverage, while catastrophic health insurance focuses on protecting against very high medical costs. Critical illness insurance covers specific severe health conditions like cancer or heart attacks. Question 24. What is the purpose of an umbrella insurance policy? A. To provide additional coverage for incidents not covered by the primary policy. B. To reduce the premium costs of the primary insurance policy. C. To cover legal expenses in the event of a lawsuit. D. To cover damage caused by natural disasters. Answer: A. To provide additional coverage for incidents not covered by the primary policy. Explanation: an umbrella insurance policy provides extra liability coverage above and beyond the limits of the primary insurance policies, such as homeowners or auto insurance. It can also cover certain claims that may not be covered by the primary policies, such as defamation or slander. Question 25. Which of the following types of insurance would cover the cost of repairing or replacing a company's equipment after a fire? A. Commercial property insurance. B. General liability insurance. C. Business interruption insurance. D. Workers' compensation insurance. Answer: A. Commercial property insurance. Explanation: commercial property insurance covers damage to a business's property, including equipment, buildings, and inventory, caused by events like fire, theft, or vandalism. General liability insurance covers third-party injuries and property damage, while business interruption insurance covers income loss during downtime. Workers' compensation insurance covers employees' work-related injuries. Question 26. Which of the following best describes replacement cost in an insurance policy? A. The amount the insurer will pay to repair the damaged property. B. The market value of the property at the time of the loss. C. The amount it would cost to replace the damaged property with a new item of similar kind and quality. D. The amount the insured paid for the property when it was originally purchased. Correct answer: C. The amount it would cost to replace the damaged property with a new item of similar kind and quality. Explanation: replacement cost refers to the amount it would take to replace a damaged or destroyed item with a new one of similar kind and quality without factoring in depreciation. This differs from actual cash value (ACV), which reduces the payout based on the depreciation of the property. Question 27. Which of the following types of insurance would cover medical costs for employees who are injured on the job? A. Workers' compensation insurance. B. General liability insurance. C. Commercial property insurance. D. Disability insurance. Answer: A. Workers' compensation insurance. Explanation: workers' compensation insurance provides coverage for medical expenses, lost wages, and rehabilitation costs for employees who are injured or become ill as a result of their job. It also covers the cost of funeral expenses if an employee dies due to a work-related injury. Question 28, scenario-based. David owns a small business and is worried about being sued for injuries someone might sustain while visiting his shop. Which of the following types of insurance would help protect his business from these types of lawsuits? A. Commercial auto insurance. B. General liability insurance. C. Business interruption insurance. D. Professional liability insurance. Answer: B. General liability insurance. Explanation: general liability insurance covers the legal costs and damages related to accidents or injuries that occur on the business premises. It protects the business owner from lawsuits for bodily injury, property damage, and advertising injury. Commercial auto insurance covers vehicles, while business interruption insurance covers lost income, and professional liability insurance covers claims of negligence or errors in services. Question 29. Which of the following insurance policies provides coverage for a homeowner's personal property that is damaged or stolen outside of their home? A. Homeowner's insurance. B. Auto insurance. C. Renter's insurance. D. Personal property insurance. Answer: A. Homeowner's insurance. Explanation: homeowner's insurance provides coverage for personal property both inside and outside the home, such as when it is stolen from a car or damaged while traveling. Renter's insurance also covers personal property, but it is for renters, not homeowners. Auto insurance generally covers damage to the vehicle, and personal property insurance is not a distinct policy. Question 30. Which of the following would not be covered by a standard homeowner's insurance policy? A. Damage caused by a windstorm. B. Theft of personal property. C. Water damage from a burst pipe. D. Damage caused by an earthquake. Answer: D. Damage caused by an earthquake. Explanation: a standard homeowner's insurance policy typically excludes coverage for certain types of damage, such as from earthquakes or floods. These types of damage often require separate policies or endorsements. Windstorm, theft, and burst pipe damage are usually covered under standard homeowners insurance policies.